What's up, family? This is your boy Ivan Hall, the Credit King. Are you trying to buy a car? Here is some information you should know about auto loans and auto financing to help you with your purchase. The majority of Americans require a loan to purchase a car, and the majority of these loans are obtained via the auto dealership with whom they are dealing. There are alternative methods to get an auto loan, and doing some research before going out to buy a new automobile will help you a lot. You've discovered the automobile of your dreams, but you lack the funds to purchase it outright. Who does, after all? It is quite beneficial to shop for finance before visiting a car dealership. A car loan can be obtained from a variety of sources. A car loan is similar to a house loan in that you must qualify based on your credit and income. The majority of banks and auto dealerships provide financing options for customers with less than perfect credit. Here are a few options for auto financing. Finance companies. A captive financing company is a finance firm that is owned by an auto manufacturer, such as Ford Motor Credit or Toyota Motor Credit. Finance corporations purchase loans in bulk, mark them up and resell them at retail. It may be simpler to obtain credit from a financing firm than from a bank, but this generally comes at a greater cost in terms of interest. Auto dealer finance. Obtaining financing from an auto dealer should be avoided at all costs. The dealership receives a greater fee the higher the interest rate they charge you. Some loan providers have a restriction on how much extra interest percentage points an auto dealership may charge you, while others don't. Banks. If you have a long-standing connection with a bank, you may be able to negotiate better conditions, such as a reduced interest rate. However, you do not need to have an existing account with a bank to obtain a loan from them, so shop around for the cheapest interest rate. Credit unions. To get a loan from a credit union, you must be a member. Credit unions have the best loan rates, with interest rates generally half to 1 percentage point cheaper than bank vehicle loans. Furthermore, credit unions usually charge simple interest, which saves you money. Online financing. You may compare rates from all around the country at any time of day or night using the internet. Several loans are only accessible online, and many sites include built-in calculators to assist you to figure out how much it will cost to finance your vehicle. Home equity loans. Equity refers to the difference between what you paid for your home and its current worth. This is, in essence, a second mortgage on your house that is tax-deductible. This is an especially attractive offer if you already have a line of credit and don't have to pay any additional origination costs. However, you should think twice about taking out this form of loan. If you default on your auto payments, you might lose your home. To ensure the best potential profitability, certain loans contain a prepayment penalty. Make sure you ask your loan officer whether the package he's selling you includes a prepayment penalty. A prepayment penalty may be inserted into a loan that does not appear to have one. The rule of 78 is what it's called. Let's say you wish to pay off your loan sooner rather than later. You have your amortization schedule and use it to determine the payout. When you phone your bank to inform them you want to pay off your loan 2 years early, they give you a payback figure that is substantially higher than the one on your amortization plan. What's going on? When lenders apply the rule of 78, the entire financing charge is spread throughout all payments, although interest is charged more early in the loan period and less later, compared to other approaches. Examine your truth in lending statement. Ask the lender if it uses the rule of 78 to calculate interest. If you encounter a language like "you will not be entitled to any refund of a portion of the financing fee if you prepay." Payment shaver loans are a form of loan offered by several credit unions in response to the increasing cost of lease payments. This loan combines the modest payments of a lease, up to 30%, with the equity-building payments of a traditional loan. The borrower has 4 alternatives at the end of a payment shaver loan. The debt will be paid off if you return the automobile to the credit union. Pay off the loan sum by selling the automobile. Pay off the loan sum by trading in the automobile. Keep the automobile and refinance or pay off the amount. A payment shaver loan also has the following features. You will not be required to submit a down payment or a security deposit. It provides a mileage allowance of up to 18,000 miles per year, with an 8-cent penalty for each excess mile driven. Aside from extra miles, there's not much to be concerned about towards the end of a payment shaver loan. The automobile will be inspected for insurable physical damage, such as broken windows, grills, or headlights, as well as missing or stolen goods. But that's all there is to it. When it comes to financing a vehicle, there are a few things to keep in mind. Asking questions is the single most critical thing you can do to guarantee you obtain the greatest finance package for your new automobile. There are several inquiries. For example, what is the exact pricing of the vehicle that I am purchasing? What is the entire amount of money that is being invested? What is the financing fee amount? How do you calculate the annual percentage rate, APR? What is each payment's precise amount? How many payments have you received in total? You will receive a good interest rate and save money in the long run if you keep all of these helpful guidelines in mind and conduct some due research before heading out to the auto dealership. Be careful and go get that money.